everyone, welcome back to my channel. I'm Debbie Lee here with the White Samurai Investment Group today. And today we're going to be diving into a topic that I think most of the working class people should understand. The top ETFs and why they're so powerful for everyday investors. Specifically, we will be talking about 3 ETFs that you can start building wealth in a simple, consistent, and practical way. So we will be talking about the dividend ETF, the global diversification ETF, and the high quality real estate ETF. Now, I know what a lot of you are thinking. ETFs? Stocks? Investing? That's complicated. But no, it's not. But Debbie, I don't have time for that. I don't have any of the money for that. Trust me, I grew up in a working class family. I'm a working class girly at heart. Like, I know how it is. I know how it is. And the financial world always seemed designed for other people. The wealthy, the financial experts, or people with insider knowledge. Most of us were never taught how to invest smarter, safer, and consistently. Yet, if we all want financial freedom, right, we all do, we want a future where our money works for us. Instead of us working endlessly for money that just never seems to grow, money that just never seems to be within our grasp. We're working paycheck to paycheck, paying all our bills, and then what's left? A couple of bucks for a dinner out here and there. That's it. But the thing, here's the thing. Building wealth doesn't have to be complicated. You don't have to guess which stock will go up next week. You don't have to spend hours analyzing the company reports. You don't need a huge salary to get started either. That is where ETFs, or exchange trade funds, come in. An ETF is essentially a basket of the stocks or the bonds or real estate all bundled together so that you can invest in hundreds or even thousands of companies in one purchase. One ETF can give you more diversification and security than owning a handful of individual stocks, which reduces the risk and makes growth more consistent over time. So in this video, we are going to focus on 3 ETFs that can change the world, change the way working class people approach investing. So, first of all, let me write that down. Long-term investing, 3 ETFs. What are my markers going? Let me just get a marker, hold on. Okay, so hopefully that's going to look a little bit better. Yes. Oh, that's so much better. Three ETFs. Wow. Okay, so number one. What was the first one? Okay. Number two. What was that one? BXUS. Number three. High quality real estate. ETF. VNQ. Okay, so okay, so oh, I hope that it doesn't say three, does it? Okay, so these are the three ETFs. So in this video, we are going to focus on three ETFs that can change the way that working class people approach investing. So the first one that we are going to be talking about is the SCHD, so the dividend ETF that pays you while you hold it. So this means that you are earning money even if the market is moving sideways. The second one is the VXUS, so the Global Diversification ETF that gives you exposure to thousands of companies outside the US, so helping protect your portfolio and tap into growth across the world. And third, the VNQ, the Vanguard Real Estate ETF, which allows you to own real estate, both commercial and residential, without even buying a single property yourself. So by the end of this video, you'll understand how each of these ETFs work and why they're powerful, and how they can help you create long-term wealth, even if you're starting with small contributions. I want you to walk away realizing that investing isn't just for the wealthy or the financial experts. It's for anyone willing to learn, anyone willing to take small steps, consistency, and use the right tools. So before we dive into these specifics of all the ETFs, I want to share a story that perfectly illustrates why understanding and using these tools can make such a huge difference for everyday people like you and me. It's about consistency, it's about strategy, and it's about taking control of your financial future. the principles that any working class person can apply today. So, I want to share a story about a friend of mine. So, let's call him James. And James works full-time in a factory. He earns a decent wage, but like many working class people, he's always felt like he was living paycheck to paycheck, right? I've certainly lived like that my entire life. He saved a little bit here and there, but he never saw his money grow in a meaningful way. He wanted financial security and maybe even freedom, but investing seemed complicated and very risky and honestly kind of intimidating. Most of his friends were focused on paying bills and renting and day-to-day expenses. The idea of playing the stock market felt like something for other people and not for him. So one day, James decided he wanted to take control of his financial future. He started learning about ETFs, something that he'd heard about but never fully understood. He discovered the dividend ETF, which is the SCHD, and something clicked for him. The SCHD isn't about gambling on one company going up. It's about investing in a collection of strong, reliable US companies that pay dividends consistently. So that means he would get paid just for holding it. Think of it like a mini paycheck coming from your investments, something that grows over time while you sleep. James decided to start small. He started only with, how much was it, like $50 or $100 a month. It didn't feel like much at first, but the key is consistency. So a few months in, James saw his first dividend payout. It wasn't life-changing money, but it definitely changed his mindset. And he realized that investing didn't have to be scary or complicated. Even all the small contributions grow over time, and the dividends reinvested would compound into even more growth. He began to feel in control of his future for the first time. Then James also added the global diversification ETF, so the VXUS. So he added this to his portfolio, and it meant that he was now investing in thousands of companies outside of the US. So from Europe to Asia and emerging markets in Latin America and Africa. So before this, James never thought that he could own part of international companies or even participate in global growth. Suddenly, his portfolio wasn't just tied to the US economy. It was diverse and resilient and positioned to benefit from growth all over the world. This move it gave him peace of mind. So knowing that if one economy slowed down, his investments weren't completely exposed. Finally, James also discovered the VNQ, so the Vanguard Real Estate ETF. So real estate always seemed like a dream out of reach. Buying a house or renting an apartment required a lot of money and came with headaches like maintenance and tenants. So the VNQ solved that problem. Through this ETF, he could invest in real estate projects across the country, from commercial buildings to apartments without even ever owning property himself. It allowed him to participate in rental income and real estate appreciation, something that he thought he would never achieve on his own. So over the next few years, James contributed small, consistent amounts to these ETFs. And what is amazing about this is that the time did the heavy lifting. The combination of the dividend income from the SCHD, the global growth from the VXUS, and the real estate exposure from the VNQ created a portfolio that was diversified, that was resilient, and positioned for nothing but long-term growth. James didn't get rich overnight, unfortunately. That's not how it works. But he did build real tangible wealth step by step without taking any unnecessary risks or relying on luck. So what's more important is the mindset shift. James went from feeling stuck and powerless to feeling confident and in control of his money. He started thinking systematically about long-term goals like paying off debt, saving for emergencies, and eventually creating financial freedom for himself and for his family. So ETFs gave him simplicity, stability, and a simplistic way, systematic way to grow wealth, proving that even working class people can take part in opportunities that were once considered exclusive to the wealthy. James's story shows that building wealth isn't just about luck or insider knowledge. It's just about understanding the right tools, starting small and staying consistent, and letting time and compounding do all the heavy lifting. So the dividends like the SCHD, the global ETFs like the VXUS, and the real estate ETFs like the VNQ are exactly the kind of tools that make this possible for everyday investors. You don't have to be a stock picking genius to grow your wealth. You just need the right strategy, patience, and a long-term mindset. So this brings us to topic number 1, the dividend ETF, the SCHD. So when most people hear investing in stocks, their first thought is often, I have to pick the right company and hope it goes up. And it can definitely feel overwhelming and risky, especially for the working class people who don't have a lot of capital to spare either. That's where a dividend ETF like SCHD comes in, and it's why it's such a powerful tool for everyday investors. So the SCHD stands for the Schwab US Dividend Equity ETF. It's a fund that invests in US companies with strong histories of paying dividends. But what exactly is a dividend, Debbie? What are we talking about here? A dividend is a payment that a company gives to its shareholders. So typically out of its profits. In simple terms, it's like getting a mini paycheck for owning a piece of company. Unlike relying solely on the stock price appreciation, dividends give you a steady income stream while your investment continues to grow. For everyday investors, dividends are crucial because they provide immediate tangible returns, not theoretical gains. Even if the stock market experiences ups and downs, the companies that consistently pay dividends tend to be more financially stable and resilient. They are often mature companies with strong cash flow and solid management and reliable business models. So the SCHD are carefully selecting these companies, making it a low maintenance, a high quality investment options for anyone regardless of income level or investing experience. So let's put this into perspective. Imagine that you start investing with $100 a month into the SCHD. At first, it might not seem like much, but over time, your dividends get reinvested, buying more shares automatically. This process is called compounding, and it's very incredibly powerful. It's like snowballing wealth. Your money earns your money, and then your money earns more money on top of that money that earns you more money. So what feels like a small contribution today can grow into substantial wealth over decades. And another important point is stability. Unlike a single stock where your risk is concentrated, the SCHD spreads your money across about 60 or 70 high quality US dividend paying companies. So these include household names that are financially strong and reliable. This means if one company experiences a rough patch, the impact of your overall investment is cushioned by the others. For working class investors, this diversification reduces stress and makes it easy to stick to your long-term plan instead of panicking during market dips. So dividend ETFs like the SCHD also teach a valuable financial habit, focusing on consistent long-term growth rather than short-term speculation. Many people try to time the market or to chase the next hot stock, which can lead to losses and frustration. SCHD encourages a mindset of discipline and patience, showing slow and steady growth combined with reinvested dividends beats chasing risky gains over time. So now let's talk about potential income potential. So while the SCHD dividends yield isn't extremely high compared to riskier options, it's stable and reliable, making it an excellent tool for building a foundation of passive income for everyday investors. Even a few $100 per year, even a few $100 per year in dividends can add up over time. And as your investment grows, so does the dividend, creating a self-reinforcing cycle of wealth accumulation. Another advantage of SCHD is simplicity and accessibility. You don't need to research individual companies or calculate dividends safely or worry about picking stocks that might fail. SCHD has already done the work for you, selecting financially strong companies and solid dividend histories. For working class investors, juggling jobs and bills and family responsibilities, this simplicity is priceless. It is. It allows you to invest without turning it into a full-time job and without needing insider knowledge either. So SCHD can be the foundation of a long-term investment strategy. So So pairing the dividend ETF SCHD with other ETFs, such as the VXUS for the global diversification and the VNQ for real estate exposure, creates a well-rounded portfolio that balances growth, income, and stability. Even if you start small, consistent contributions to the SCHD over 10 or 20 or 30 years can grow into a significant nest egg, giving your financial freedom and security that feels out of reach when relying solely on a paycheck very and truly real. So, in summary, the SCHD is more than just a dividend-paying ETF. It's a tool for building financial habits, gaining consistent income, reducing risk through diversification, and taking control of your long-term wealth. For the working class investors, it's an accessible and practical and reliable way to start participating in the wealth building process that most people never learn about growing up. It's the key, but the key is you need to start small and stay consistent, reinvesting dividends and letting the time and compounding do all the heavy lifting. So investing in SCHD isn't about chasing the next big win. It's about owning a piece of financially strong companies and receiving income along the way, and steadily growing your wealth over the decades. For everyday investors, this is the kind of strategy that separates those who survive paycheck to paycheck from those who create long-term financial security and freedom. So, this brings us to number 2. Let me just write. Okay, hopefully I won't forget to hold up the notes by the end of the video. So, number 2, the Global Diversification ETF. In other words, the VXUS. So, when most everyday investors think about building wealth, their first instinct is often to invest only in the US stock market. After all, it's very familiar and very convenient, and we hear about big American companies like Apple and Microsoft and Amazon every day. But the reality, putting all your money in one country, even a strong one like the US, comes with its risks. All of the economic cycles, all of the political changes, and the market downturns can all impact your investments. That's where a global diversification ETF like the VXUS becomes so powerful. The VXUS, or the Vanguard Total International Stock Exchange ETF, allows you to invest in thousands of companies outside of the US, spanning development and emerging markets. So this includes companies like Europe, Asia, Latin America, and Africa. By investing in the VXUS, you are essentially owning a piece of the global economy. Let me write that down. So instead of betting everything on one market, this spreads the risk and increases your chances of capturing growth wherever it happens. For working class investors, the VXUS is especially important because it provides access to opportunities that are otherwise hard to reach. So most people don't have the time, the expertise, or resources to research and invest in individual international stocks. I know I don't. But buying shares of companies in China or in Germany or in Brazil directly would require significant research and currency knowledge and capital as well. VXUS simplifies all of that into one ETF, giving you instant global exposure with a single purchase. So let's bring this to life with an example. Imagine you invested only in the US. During a year when the American economy slowed down, even strong companies can experience dips and your portfolio might stagnate or. Now imagine you also own the VXUS, so companies like in Europe and in Asia and Africa and emerging markets might be experiencing growth at the same time. That global exposure can balance your portfolio, cushioning against domestic market swings and giving your investments more stability. Another major benefit of the VXUS is diversification across industries and sectors. So different companies excel in different areas. For an example, Europe might have strong consumer goods or energy companies, and Asia might lead in technology and manufacturing, and emerging markets might be driving growth in raw materials and infrastructure. So by holding the VXUS, you tap into multiple economies and sectors and industries simultaneously, which reduces risk and increases long-term growth potential. For working class investors, this kind of diversification is key because it protects your hard-earned money. You don't have to worry about one company or one market fully tanking it and wiping out all of your money, all of your savings, all of your hard-earned cash. The VXUS spreads that risk across thousands of companies worldwide, giving you a buffer while still participating in growth opportunities that are shaping the future. So the VXUS also teaches an important lesson about thinking globally, not just locally. Many working class investors focus only on what they know, like the local or national economy, and that's natural, that's okay. But the world's wealth is increasingly generating internationally. So some of the fastest growing companies, especially in emerging markets, are not in the US. So owning the VXUS allows you to ride the global growth trends without needing any insider knowledge or specialized research, putting your money to work efficiently. So now let's talk about the long-term impact. If you start investing small amounts consistently into the VXUS, even like $50 or $100 a month, over decades, the combination of time, compounding, and global growth can create substantial wealth. But it won't happen overnight, obviously. Rome was not built in a day. But the power of patience and consistent investing is enormous. Your portfolio won't just grow, it will grow in a way that is resilient to individual market shocks. So pairing the VXUS with other ETFs like the SCHD for the dividends and the VNQ for real estate exposure creates a well-rounded portfolio. So The CXHD, the SCHD provides income and stability, whereas, let me write that down. Income stability. And the VNQ provides real estate exposure, obviously. The VXUS provides global growth and diversification. So together, they form a strategy that's accessible and practical and highly effective for the everyday investor who just wants long-term wealth without the stress of picking all of the individual stocks. So finally, the VXUS is not just about risk management, it's about opportunity. That's a good one, risk management. So it's about opportunity. Some of the fastest growing companies in the world are outside of the US. I know, crazy. Think of all of the tech innovation in South Korea, in India, or in China, or all the consumer goods in Europe and Latin America. By investing in VXUS, you are participating in global economy, capturing growth that might otherwise pass you if you focused only on US companies. For the working class investors, the VXUS, oh my goodness, demonstrates that building wealth is not about strategy. It's not about luck. It demonstrates that building wealth is about strategy, not about luck. You don't have to chase the next big stock or hope for a home run. You can invest in global, diversified portfolios and take advantage of growth trends worldwide and reduce your exposure to risk, all with one simple ETF. It's about making your money work for you and not the other way around. So in summary, the VXUS is a powerful tool because it provides diversification across countries, across the sectors, across industries, and exposes you to international growth, reduces risk, and simplifies investing for everyday people. It's a reminder that the world is bigger than one economy and opportunities to grow wealth are everywhere. You just need the right tools. You just need consistency and patience to capture them. So that brings us to topic number 3, the high quality real estate ETF, the VNQ. Oh, pardon me. So many everyday investors dream of owning real estate, right? Houses, apartments, commercial buildings, these are seen as very tangible, very physical, very stable investments that can generate passive income and long-term wealth. But let's be honest, real estate can be overly complicated and very expensive and very stressful as well. So buying property requires a large down payment, dealing with mortgages, managed maintenance, tenants, taxes, and the constant worry about the market fluctuations. So most of the working class people feel like this dream is out of reach. And that's why the VNQ, the Vanguard Real Estate ETF, is such a game changer. The VNQ allows you to invest in a wide range of real estate assets without even buying a single property. It's essentially a basket of real estate investment trusts, which are companies that own and manage income producing properties, including apartment complexes, office buildings, industrial facilities, and shopping centres. When you invest in VNQ, you own a piece of all of these properties indirectly, gaining exposure to the real estate market without the headaches of property management. Amazing. So, for working class investors, the VNQ is incredibly powerful because it allows you to diversify your portfolio beyond stocks and bonds. That's a good. So, real estate historically has a low correlation with the stock market, which means that when stocks dip, real estate investments remain stable or even grow. So this can provide a layer of stability and protection for your wealth that many people never consider when building a portfolio. So let's talk about income potential as well. So the high quality real estate ETFs, including those in the VNQ, are required by law to distribute a significant portion of their earnings as dividends. So this means when you invest in the VNQ, you're not just hoping for price appreciation, you are earning regular income from rental payments and property profits. For everyday investors, this is huge. Even modest dividend payouts reinvested over time can create a snowball effect, major snowball effect, building wealth passively while you focus on your job, on your family, or on other priorities. So, the beauty of the VNQ is also in its accessibility and simplicity. Unlike buying a property where you must manage tenants, maintain the property, and navigate local laws, the VNQ is just an easy way, just like buying a stock or an ETF. You don't need to be a real estate agent, you don't need to be an expert, you don't need tens of thousands of hundreds of thousands of dollars up front. You just need consistency, a long-term mindset, and the willingness to invest small amounts over time. So another advantage of diversification within real estate itself is the VNQ invests in a wide range of property types, from commercial office spaces and industrial warehouses to residential apartments and retail centers. Some properties generate stable, consistent real estate income, while others may benefit from appreciation over time. This mix reduces the risk and ensures that your investment is not dependent on a single type of property or market. So for working class investors, the VNQ also offers a way to participate in opportunities that were historically out of reach. Real estate has long been considered a wealth building tool for the wealthy because buying multiple properties requires substantial capital. VNQ levels the playing field. With a few hundred dollars a month, anyone can start building exposure to real estate and enjoy the income and growth potential that comes with it. It's also worth noting that the VNQ is a hedge against inflation. Real estate values and rental incomes tend to rise over time as the cost of goods and services increases. By including VNQ in your portfolio, you're helping protect your wealth from inflation, which can erode the value of cash savings or low yield investments. So let's bring this into perspective, right? Imagine you paired the VNQ with the SCHD and the VXUS in your portfolio. So the SCHD provides dividend income from strong US companies. The VXUS gives exposure to global growth, and the VNQ as real estate diversification and income. So together, all of these ETFs create a well-rounded, resilient, long-term portfolio. Even if the market dips or certain markets slow down, the VNQ helps smooth the ride, providing income and growth potential from a completely different asset class altogether. The VNQ, let me write that down. Completely different. So the VNQ also teaches a crucial lesson about financial strategy and mindset. It's not about just buying assets, it's about owning the right kinds of assets that work together to build wealth. Real estate, dividends, and global diversification each serve a purpose in a portfolio, and the VNQ makes it accessible without requiring specialized knowledge, time, or capital. For the working class investors, this is empowering. It proves that you don't need to be rich to invest like the rich. You just need the right tools and the discipline and the patience. Finally, VNQ is about long-term thinking. Real estate doesn't make you rich overnight, obviously. I have already said many times. And neither does investing in ETFs. But over the next 10 or the next 20 or the next 30, hopefully, or even the next 40 years of consistent investing in the VNQ can generate significant passive income, capital appreciation, and portfolio stability. It's a cornerstone for building financial freedom, especially when combined with other ETFs like the SCHD and the VXUS. So, Debbie, everything went in one ear and out the other. In summary, the VNQ is high quality, income generating and diversified real estate ETF that gives working class investors access to real estate opportunities without the hassle on expense of owning physical property. It provides income, stability, inflation protection, and long-term growth potential. Although all through a simple, accessible investment. Adding the VNQ to a portfolio of the SCHD and the VXUS creates a balanced, resilient strategy for everyday people looking to build wealth systematically. Investing in the VNQ is thinking about strategy, diversifying across asset classes, and letting time and compounding do all of the heavy lifting. For anyone that has ever dreamed of owning real estate but thought it was just out of reach, I know I used to think like that. VNQ is very practical, very achievable solution, and it's just one of the tools that can help you start building wealth today. So if you want to start building wealth like the wealthy, ETFs like the SCHD, the VXUS, and the VNQ are powerful tools that make investing simple, diversified, and consistent. The team at White Samurai Investment can help you get started with any of these ETFs, even with small contributions. So your money works for you while you focus on your life. You want to start small, stay disciplined, and let compounding and diversification do all of the heavy lifting. Financial freedom is achievable when you use the right tools and strategy. So, today we covered the top 3 ETFs, the second part, for everyday investors. Should I write that down? That all of the everyday investor should know. So the SCHD for dividend, income and stability, the VXUS for global diversification and exposure to international growth, and the VNQ for real estate opportunities without buying property. So altogether, these ETFs create a very well-rounded, diversified portfolio that allows you to grow your wealth systematically, reduce the risk, and work towards long-term financial freedom, even if you're starting small. You want to keep your consistent contributions, and even if that's all that you can manage right now. And thank you for making it this far. Please don't forget to leave a like, a comment, and subscribe to my channel, where we discuss all of the other strategies for financial freedom, what it means, how to get there, how to stay there, and how to increase it. And also everything on wealth building, anything on building a business, investing for beginners, or like other of the 3 ETFs that I've spoken about previously. And check out all my other videos. Leave a like on this video and comment if you liked anything, if you didn't like anything, if you're confused about anything, let me know or send me a message directly. And I will also leave the White Samurai Investment Group website in the description box below. So if you need help if you need any guidance on ETFs or the stocks or portfolio planning or anything like that, comment or message me, and myself or the team will do our best to get back to you. And remember, your financial freedom is a journey, and the right tools make it achievable. Thank you for watching this video, and I will see you in the next one.